Hey, beautiful people, I'm Rickita. This is Credit 101, and this is episode 21. In this episode, we're going to talk about the Federal Housing Administration, but it's also known as FHA. Just call it FHA. Nobody calls it by its other name. But this, you guys, is a part of the U.S. Department of Housing and Urban Development. Okay, you guys? Now, I love the FHA because they require you to put less money down. We're going to talk about the requirements and then also talk about the credit score requirements because it's much lower than what I told you guys about the Fannie Mac. Fannie Mac for conventional, they need you to have a 620 credit score, and your credit score can be much lower with FHA, all the way down to a 500 credit score. But it's certain things we need to learn about when you think of 500 credit score to get a mortgage. Okay, so with the FHA, they insure mortgages to encourage people to make loans on these home mortgages. Now, when I say they insure it, you guys have special insurance on your mortgage. Now, the thing is, you guys will have to pay PMI, and this is going to be your mortgage insurance. Basically, that's why I always tell people, if you can put 20% down and you can avoid this. I've seen buyers pay an extra $150 per month, and that's a lot of money because they have to pay it for the lifetime of their loan. And with FHA, you cannot take that PMI out when you hit that 20%. You cannot do that. So I tell people to keep that in mind. If you can't put more money down, put more money down, because that's money that you're saving every month. I wish I did the calculations on there, but I know it's a lot of money. So you're going to have that special mortgage insurance, and it's basically, if you default on it, they're going to come in and pay the rest of it off. So it's kind of like them having insurance. It's like it's insurance. So it's kind of like them having insurance. It is insurance. Okay. Now, they have a different criteria than Fannie Mac, depending on your credit score. That's what they're going to determine on what you have to put down. So if you guys have a credit score below a 580, which means, your credit's not the best, they can still give you a mortgage, but they require you to put 10% down. So if you buy a $200,000 home, you have to put $20,000 down on it. Okay. So keep that in mind. Also, if your credit score is higher than a 580, then you only have to put 3.5% down, which is really good. So with that same $200,000 home, you only have to put $7,000 down. So that is really good for those people that want to put less money down. Again, if you could put more money down, you guys, you can avoid that PMI. That 150 can pay a bill, like a whole bill, you guys. Keep that in mind. And I'm not playing about that. I just don't want to have it. I teach you guys about these different things. You need to know the basics, and then you need to figure out how to avoid these different things and how to pivot around it. Now, if you guys have a credit score under 500, you can't get a loan. FHA, they go all the way down to a 500 credit score, but a lot of lenders would not even give you a loan because lenders couldn't have even more requirements for you. But this is what the FHA loan, you guys, remember, you can get a house with a 580 credit score and put 3.5% down. Okay. If you guys have a credit score under a 580, a lot of lenders, they really wouldn't want to do it, but some lenders probably could do, but you have to put 10% down. The higher your credit score, the better your interest rate. Remember, your credit score is going to dictate your interest rate. You want to have a very good interest rate. 1% or even a fraction of that percentage can change your mortgage by a lot of money, you guys. I'm going to teach you guys about that because it blew my mind when I learned how to calculate a mortgage on hand, like by hand with a calculator. I'm like, what? And then you just change the percentage by 1. So I want to teach you guys those different things, but let's go ahead and talk about the Experian Automotive in episode 22. I'll see you guys there.